morning. He's here in a piece from Washington or setting up the public.
Good morning, everybody. Welcome to the Flow Show. Hope you're doing fine this, I don't know what day it is, Thursday the 6th of June. Hope you're all doing well. Morning, Kay. How's it going, mate?
Good morning, Ryan. Good morning, everybody. Yeah, it's L Day, Lagarde Day, as compared to D-Day. 80 years later, we've got a new L Day now, but I hope it's going to be a short one and not to be repeated too often.
I can't wait. Can't wait. I'll stick pins in my eyes. But anyway, yeah, we've got to get over these trials and tribulations that are sent before us. We'll talk about the ECB. Obviously, let's get through some of the news headlines that's been going on over in Japan. One of the doves has been flapping his wings. BOJ's Nakamura says that Japan's economy is recovering moderately, albeit with some weak signs. His view is that inflation may not reach 2% from fiscal 2025 onward if consumption weakens. It will focus on whether inflation-adjusted consumption turns positive when deciding monetary or the future of monetary policy. Then commented on the currency, saying the weak yen is becoming a big issue. Then speaking about monetary policy and FX implications, says we cannot directly control FX moves with monetary policy, and we shouldn't resort easily to monetary policy in addressing yen falls. It says raising rates at next week's policy meeting would be too early, but, and this might be a little bit of a hint, says it's hard to say whether it would be premature to taper bond buying at next week's meeting. Kay, is that a little bit cryptic, that line?
Wow. You know, he's the Uber dove, but at the other, on the other side, they are Japanese as well, right? So they can't go too much against the main man in the house. And we've heard from Ueda that I think the bond adjustment, when is it? Next week, the week after, yen. Next week, on the 14th. I think the bond buying thing is sort of done, but you know, Nakamura was the dissenter last time as well when they hiked rates. So he's the we can qualify him as the Uber dove in the house. So yeah, I don't think one vote is going to change anything if they decide to change the bond buying program. So that's about what there is to say about Nakamura. But then Ueda spoke as well today, and he wasn't talking about much more than the bond buying adjustment either, right?
No, that's right.
That makes me think that I need to screw back on my risk scenario that I put forward, or I was thinking about, saying that they may actually do something this month. Whether it's not a panic move, but they may do something if the yen continues to permanently or continuous showing continuous weakness. So, but listening to what Ueda said, I'm not sure it's on the cards, you know.
Yeah, I mean, Ueda came out with his usual load of waffle, pretty much. There wasn't anything too much from him. But an interesting comment there from Nakamura about using monetary policy to control FX, and it isn't really a policy that it moves FX by mechanics rather than by design. So yeah, you know, if they're going to try messing around with monetary policy just for FX moves, then it's not going to work. It's going to end up with egg on their face. So yeah, I'm loath to believe that they would move monetary policy just on FX. As I say, just don't think it's a tool it's not a tool for it, long and short.
It is not, but you never know what they discuss between the government and the Ministry of Finance and the Bank of Japan. You never know. I mean, it's Japan. It's not. They don't have the same understanding of in CB independence than the rest of the world, right?
Yeah, I mean the only real way that monetary policy would affect FX is to obviously narrow the carry trade for everyone. But then, unless they're taking rates to 5% or something, they're not going to do anything. That's
Yeah,
still not
and
going to help. So,
yeah.
yeah. But I
And you
want,
brought up
just
something very interesting there. The carry trade. If they start to hike rates and intervene massively, they are going to kill Mrs. Watanabe and her son.
yeah,
So started to trade, and the nephews who also started to trade over the pandemic. So yeah, I mean it's a very very good point there. Yeah.
and I was just going to talk off the cuff. If they did raise rates with an FX view, do you think that would be accompanied by intervention as well, and sort of hit it with a double mallet?
That would be the strongest signal ever.
Yeah,
Well, actually, no, we have seen it the other way in former years. When there were cutting rates and then going to intervene to sell yen. But that's always, in a way, materially for one more easy because you just print your own currency, right? But also psychologically, it's more easy to go and sit on in those days at least because the yen was getting too strong. But then it didn't prevent from strengthening more until Abe came into the framework, right? So
yeah,
that it would be an extremely strong signal. It would make the speculators think twice for sure. But then you need to accompany to that with a framework where you lastingly turn the ship around, which is very hard to do. Very hard to do right now, unless again, and then that brings us back to what we've been saying so often, is that unless the rest of the world falls apart around it, and then if you get bad numbers elsewhere, and then you hit the market twice, or then yeah, then you're going to turn the ship around.
yeah.
There's just one thing to do for the Bank of Japan and the MOF, right? It is to hire S&B's Jordan once he gives up. He's he's going to put the market in its place. Don't worry.
Yeah, with a much bigger ammo chest as well. That would be fun if that ever happened. And stranger things have happened,
I
but
think
we
I
shall
think
see.
I'll sell a few dollar yen if they hire Jordan.
Yeah, that could be trade of the decade. That one. Well, speaking of Japanese carry traders, and this is exactly what we've been talking about this week regarding Mexico and the peso. There was some data out from some of the foreign exchange margin trading firms over in Japan. And that said that the ratio of trader positions that are long on the Mexico peso against the yen stood at 96% as of the 4th of June, and it was down only 1 percentage point from the previous week. So, long story short, Japanese carry traders haven't been shaken out of the trade too much by what's going on in the politics. So that's making what we've become to suspect that this is more an investor, or this was more just a short, sharp investor worries move. And as you can see, it's still being undone here in dollar MEX. If we look at MEX yen quickly, you can see that we're also seeing a similar thing going on there, where we're having a bit of reversal of this spike lower. So no one in the carry space, or not many in the carry space, has been shaken out yet by this move. Depends what happens after, of course. I'm taking a small long against this broken 1740 zone just to see if technically the break is going to hold, and more so if that uncertainty around the election is going to continue for a bit longer. If we get a quick move under this level, then it's likely we're seeing yet another just event spike, and it's back to normal for that one. But yeah, carry traders aren't being shaken so far by that. Is that any sort of surprise, do you think, Kay?
Well, I mean, we've been talking about it. I think the short term ones I've had their scare, but perhaps they went out of it and then back into it. If you look at the pandemic move in MEX yen, and we have to be clear. I mean, people were not buying MEX yen in March 2020. Okay, they've entered this play later for sure.
Yeah.
And I think they rather entered it. If you go back onto the MEX yen for a minute, Ryan, on the daily. Yeah, and so if you look at it, put just the fib on from the low to the high, and then I'll tell you, I think the real carry trade in the MEX yen, for instance, started in 2021, around anywhere between May and December 2021. So the first bounce, then we stopped a little while, and then we started to go up again, and then especially in 2022, the thing accelerated. Okay. If you look at this whole thing, and assuming that they entered even only in 2022, sorry, we only went tip top back to the 23.6%, even on the second leg from 2022. Okay, so if you are a carry trader and you look at this pure from a technical perspective, you normally will not let your position go if you're a long termer before at least a 23.6 or even 38.2, right? Because those are still considered as somewhere healthy also corrections. So I think it is right. The long-term carry traders have not been shaken out, and they may actually be pleasantly surprised by the bounce that we saw since.
Yeah, very much so. And this whole thing has been a bit of a lesson for people. Don't get sucked into the short-term volatility. Plot your levels. If things are going to break, it's these sort of levels that are going to break. Okay, and when those start breaking, that's when you got something more on your hands. Moves like this, just let them be for a bit. Let them settle down and see what they want to do. They might continue, but at a more gradual pace, and that will indicate something has changed. But until then, don't. It's easy to get sucked in. Oh yeah, quick jump in, buy Mexican peso at 18.10, 18.15 on the rally because it's going to 19, and then all of a sudden you're 600-700 pips offside or more, depending on your decimal places in your trade. So yeah, a little bit of a lesson there as well. Right, sticking with Japan. Japan are going to raise their cap on state backing for copper mine stakes to 75%, according to the Nikkei. Why is this important news? Well, you may remember that they've opened up some big plants over there for chip making, TSMC being one of them. Obviously, copper is a big feature of that as well. So they're looking to increase their share in that sector. They've got a lot of investment in South Africa and Australia for copper. They also want to protect supplies. Everyone's seen that the copper rally that we've had and stories about supply issues, shortages and whatnot. So Japan are making a move there, but it works both ways. It also fulfills the investment part of things with those plants. Kay, just quickly, we had a 30-year auction which had a very strong take-up, bid to cover 3.59 versus 3.24 previously, and a decent jump in the yield as well. Should we be watching these auctions a bit closer now?
I think so, my friend, because we are now getting slowly towards the end of the first quarter, and typically second quarter as well. The Japanese tend to come in with fresh investments. So if we see bigger take-ups in those auctions, that could put a bit of a natural cap on what's happening in the yields environment in Japan as well. I'm not saying that this is what drove the yen weaker overnight, because those last 30, 40, 50 points were really the combination between Nakamura and Ueda. Yeah, we will have to, because that's what I've been saying now, because they're sitting on the side with a lot of cash in Japan, because we know that stuff. The whales like GPIF and friends, they have been putting their money at work outside, but having had lower levels of JGB involvement for a number of years, and that is now something that we should watch. But the problem is, at the start at least, it's a bit of a double-edged sword, because it may cap actually the advance of the yields, and that is medium to longer term. The problem is it's not necessarily on the back of that cap that the yen will weaken, because imagine that they sell foreign bonds and to repatriate back home. That's going to have a bit of a negative effect on the currencies elsewhere, and a positive effect on the yen, because it kind of translates as repatriating funds. So for me at least, and I know from the past, it's a bit of a tough trade, that one, because unless we know exactly how much is going like hedged and unhedged, it's very hard to know whether this is going to be positive or negative yen in the immediate event of the thing. We will know how it pans out if those guys continue to buy those bonds in Japan, and we see. When those auctions come out, we see a reaction in the foreign bond market. So I mean, it's a bit of a complicated watch, and we as retailers, we are outside of that area where we can really judge exactly what's going on.
Yeah, cool. So yeah, something we're going to keep an eye on, no doubt, for the foreseeable future, particularly in the view of rate hikes coming. Ali, yes, we will obviously get to the BOC shortly. Gavin's still on the fish and chip quips over there, because it's fish and chip day today. But obviously, more importantly, we're celebrating the Normandy landings and whatnot. So we all should take a moment of reflection over that. Anyway, over to the ECB, and we had a piece out from Econostream yesterday. Insiders see the likelihood of a July cut as low, but they don't expect it to be excluded. I don't think there's many that see a high chance of a quick follow-up cut in July, but that's really going to be what we're going to be trading potentially when we get the ECB meeting, but we'll talk about that in more detail shortly. Bit of data out this morning from around the grounds. Industrial production data. Well, start with Germany. Germany factory orders there coming in a little bit crappy. We're expected to rise 0.6%, came in negative -0.2 month on month. On the workday adjusted year-on-year number was expected to rise 0.3% following last month's -1.9%, but it came in -1.6%. So these green shoots in Germany not showing just yet, but although they did have decent services PMI yesterday, as we spoke about. In the construction sector, there was a little bit of an improvement, but we're still seeing many of the Eurozone countries deep in contraction. Germany with a 38.5 contraction. It's not often you see things that tight. Retail sales in Italy, a little bit on the soggy side as well. The construction PMI for the UK coming up roses, jumped there to 54.7. So more of an improvement going on there. Retail sales in the Eurozone looking quite anemic, shall we say. Month on month was down 0.5% versus minus 0.2 expected, flat year on year. So we're not seeing a chipper Eurozone consumer at the moment. Over to the Yanks, and we had the ADP yesterday, which was a miss of expectations, and the prior month got dragged down a little bit, but it's still a positive number. Reading through some of the details though, and the comments, some of the details there. Manufacturing took a bit of a hit, but we'd seen that previously in some of the numbers elsewhere in the PMIs or whatnot, although there was an improvement this month. We had the final S&P services PMI. We had Canada coming in first and foremost. If I can find it, you guys deceive me. Where is it? Missed it. It went into expansion. Canada up at 51.1 versus 49.3. So decent numbers there. The US PMIs First we had S&P, which came in unchanged over the flash number 54.8. So that was all fine. Then we got the ISM, which beat expectations. We were in contraction last month, was expected to move into expansion, 51.1. It came in a whopping 54.8. So that was a very good, where are we going? 54.8, 53.8, sorry. I can't even read my own writing. 53.8 on there. New orders, decent rise as well. Employment picked up as expected, but still remains in negative territory. Business activity picking up as well. The all-important prices paid number came down a little bit, but still running at a stronger number. Now, within that, there was also a big jump in export orders. That went from contraction at 47.9 to expansion at 61.8. Although imports went the other way, they went into contraction from expansion, but that's still good, having decent exports there. In the comments, they were a little bit bearish. The manufacturing comments were very mixed. These ones are a little bit bearish. No overly real negative stuff, but maybe just a few more little yellow flags being waved about that one. And then on to the BOC. Well, they went and cut 25 pips to 4.75 as expected. The notes and the statement saying it's reasonable to expect further cuts if inflation eases. The BOC's Macklem was out saying lowering rates too fast would jeopardise the progress. So that's putting them in maybe pause or very cautionary mode for future cuts. So the timing of further cuts depends on the data. We'll be taking decisions one meeting at a time. The path of future rates likely to be gradual. Then said the BOC doesn't need to move in lockstep with the Federal Reserve, but there are limits to how far the BOC can diverge from the Fed, although they're currently not close to their limits. So they're pretty much saying they won't be cutting too far if the Fed is staying on hold. There's a limit to how much of that gap they will want to open up. Just some of the, before I bring Kane, just before that, we've had some banks rejigging their forecast now. Scotiabank is expecting another cut in July, and then 100 basis points of easing this year in total, and that's up from 75 pips they predicted previously. TD now expect another 50 basis points cuts. First of these to come in July, and then a pause. ING say this 25 pip move is likely to be followed by a further 75 pips of cuts in the second half of the year. So really ramping up cut expectations over there in Canada. Kay, what did you make of it all? Price-wise, market reaction-wise, a bit of a damp squib. No ranges tested, no ranges broken. Moving on, I think.
Yes, well, I mean, that's what I said, a cautious cut, and that's what we got. And really, I don't think that we have to. Macklem said it. He said, like, let's enjoy the moment. That says it all, I guess. He's like one cut, and now we are back to data dependency. Not completely independent from the Fed, but having cut before and without them hinting at any cuts at the Fed, that means that they keep enough independency from what other major central banks will do. So I guess that is what we've got. And as you say, no ranges broken. An attempt to sell Canadian dollar countered because the dollar is not really the flavor of the moment, barring a couple of currencies. But it's exactly what we got. I think now again, and I always like to do that. If you look at exactly just before you had that labor productivity, but it's still a Q1 number, which was negative. And tomorrow we will have, at the same time that we get the NFP report, we are going to get the Canadian jobs report, and that can be your catalyst for either telling the market that they were right in cutting because the jobs market in Canada is starting to slow down, or it was just a blip, and we see a revival. And then if that would come on top of a bit of a weaker NFP, then the Canadian dollar could all of a sudden be the shining star of tomorrow. So tomorrow, to me, is going to be one very, very important day for the Canadian dollar.
Yeah, and it's funny because talking about the expectations, you know, so I'm expecting 3, 4 cuts, 2, 3, 4 cuts. We've only got 4 meetings left. So for them to cut every meeting, that's a real cutting phase. That's not a slowly and cautious move. So is the market again going a little bit too dovish, perhaps?
I think so. I think so. For the time being, I think so. This was not a... Well, McClem would have perhaps liked it, but then Rogers is always there to tell him to hold back his horses a little bit. So yeah, I don't... I mean, it's good. It's such a data-dependent affair that it's so tough to call all of this, right? And I am not... let's say that I'm not in the camp of cutting every meeting. I don't think so. I really, no, not right now. If I see more weak Canadian data, then I'll say, okay. I mean, they will cut every meeting possibly, but where we are now, impossible to tell.
Yeah, no, I agree with that. And as I said, the reaction in dollar CAD was less than inspiring, shall we say, yesterday. I was looking for maybe a move up to the top end of the range, up towards these high 137s, and we just about got to 137.40, and now we're back in the box once again. So nothing really there. I mean, if you wanted to trade off these highs, you could have made some decent pips, but it wasn't for me. I had my levels, and we never got there. So we're back to staying in the range and seeing what the dollar and data wants to do for the CAD thereafter on that one. Patrick just asked about is it his imagination has been large amount of global bond buying? Are you talking just like things on the auctions, or are you talking just in general, Patrick? You know, just moves in yields and whatever. It's one thing that, you know, we obviously keep an eye on the short term. Well, we keep an eye on all the yields really, and so yeah, there's been a bit of a bid in yields at the moment. I think what happens in US yields has a big drag. It seems of late the yield space, the yield universe, all moves in tandem with each other. So it all goes. It's like a shoal of fish all swimming in the same direction. It's not really down to one country's better than another, and we see different moves. Generally, the moves are all going in the same way. I think it's just perhaps a byproduct of the fact that rates are starting to come down slowly and surely. The central banks are cutting. BOC's gone. ECB's going to go today. You know, Fed, we don't know. Bank of England might be June. You know, it's the market we're in at the moment. It's the fundamental situation we're in at the moment. Everyone knows rates are coming down. If rates are coming down, you don't see a yield staying higher. So people get in and they lock in the high yield for fear of losing out on those decent returns there. Sovereign. Okay. Yeah, I get that.
Yeah,
Kay, you got any thoughts on the bond market in general?
Yeah, that's exactly it. We have seen this, Patrick, for months and months now, that the whole bond market is one big pot of net. And when we have seen, and that was where everything was looking so bizarre for a while. It's just that people are managing the portfolio in different countries or continents even as one, because we've seen German and European yields go up where there was absolutely zero reason for them to go up, and it was just because of the US bond market was coming down. So those Euro bonds were coming off as well, and now we are seeing a bit of a give back, because we are at the start of the potential to see lower yields a bit across the board. But we've also seen a little bit of it's maybe not even orange yet, but yellowy flags or orangey flags in the US, so the US yields are coming down. But then the ECB announced a rate cut, and the Bank of Canada cut. So I mean, it's a bit, and as Ryan said, the UK is an uncertainty. So it's still, everything is still going as one big basket trade. And so yes, we've seen a bit of a revival of the global bond market. Today specifically, I don't know how much further it could go, but if for instance tomorrow we're getting a little bit of a weaker jobs report in the US, and add on top perhaps in the same vein bit of a weaker jobs report in the Canadian market, I think we can see an acceleration of this bond move. You know, you are probably watching F.A.C.E as well. So Dale is talking about those things. We have seen the breakup, or the attempt at least in the breakup in TLT, for instance, and in the 10-year in the ZN, and it's yeah, and the rest of the bond market is following suit.
Yeah, thanks, mate. Ali, you've asked 100 questions there. Oh, they're all questions we could spend hours talking about, so I'm not going to go through them here and now in the show. We've spoken about them often enough. You know, that's the sort of thing. If you want to come and join us in the chat room, we can talk about that to your heart's content. But you know, what's the role of the BOJ in hiking, and when's the downtrending dollar yen going to start, and all the rest of it, mate. It's too much to get into on this show. So yeah, if you want to come and talk to us all day about that, mate, then come and join us in the chat room. Over in South Africa, the ANC have begun talks with parties on a coalition. They want to create some grand national unity thing or other. But so far they've had meetings with delegations from all the other parties, except for the MK party, Zuma's current party. They've reached out to them with no positive response. So we're still waiting to see what happens over there with those elections and what sort of government gets formed. Over at OPEC, Saudi energy minister said, or OPEC Plus says, they have the option to pause or reverse output increases. Bit of talk in there. They also said that the OPEC General Secretary said the demand for oil is good and resilient. That's definite book talking, although he's probably talking out his arse regarding that. And in other geopolitics, Hamas has apparently rejected the ceasefire hostage proposal that the US put on the table. So back to square one there in that situation. And that's it from the news front. Unless Mr. K has anything.
No. Moving on.
Moving on. Cool, good stuff. Oh, hang on. Breaking everything at the moment. Right, so what do we want to have a look at? ECB. Let's have a look at the ECB. Now, if you thought you're getting a little move in the Canadian dollar over the BOC cutting rates, I don't hold out much hope for euro dollar today. Overall, I think the path of least resistance is higher for euro and euro pairs. How far? That's anyone's guess. We do have a lot of options expiring today, particularly around the 109 big figure, over 5 billion expiring up there. That won't be until 20-30 minutes after Lagarde's finished waffling. So, you know, depends where we are when that comes into play, but that's certainly keeping prices well contained at the moment. We're not trading what happens today. Okay, there may be a little confirmation move on the algos seeing the word cut and reacting, but what they do today isn't important. What they signal for the future is: are we going to get a quick cut in July? Are we going to get a cautious cut and they're on wait and see mode like the Bank of Canada? If it's that sort of thing, I don't expect much volatility in the euro. However, what I would say is, as we've been in a bit of a short-term bullish trend, we could just be hanging around to get over any risk humps from the ECB. And after that, maybe we continue moving higher. That's just one train of thought I've got. Also, over the ECB, if there is some big news and you don't see the euro moving, don't take it as a sign that it's not going to bust a move afterwards. What happens many times during central bank meetings, particularly ECB, is that you get some news, you get a move, then we pause because the market wants to see, is there going to be another line that adds to that, or a line that takes something away from that move from the guard? And then after she's finished, the market says, right, we've got all the information, now we're going to move, and off it goes again, or doesn't, whatever the case may be. So there's different risks around these ECB meetings, but they all tend to follow the same pattern. I'm still long euro sterling. I've moved my stops well out the way to below the 84 level, just in case there's any volatility there. But otherwise, I would not be surprised if the euro goes high after this, and I also wouldn't be surprised if we're trading the same price we are now after it all either. So low volatility is what I'm saying, basically. Kay, your thoughts?
Yeah, I think the ECB is a bigger central bank than the Bank of Canada, but I'm going for the same cautious cut that is cut now and don't signal anything later. It has been the case that Lagarde was slightly siding more with the hawkish people in the governing council, so that may be the interesting bit to take away if she starts to sound differently. But I think basically it's so well telegraphed. I mean, it would be a crime if they don't cut 25 BPs today, because they all virtually just announced it. And but we've heard enough uncertainty about July to, I would say, the market should not be surprised if they cut 25 and say like July is by no means a done thing. Because I also don't think that they want to go and cut aggressively before the Fed even starts. Even if they say they're independent, it's a load of bollocks, we know, right? They
Yeah.
did say that, and some of them actually said as much, is that they would look to the side and look at what the Fed is doing, because because if they cut, let's say, only twice before the Fed, that opens up the interest rate differentials even more. And I don't think that they want the euro to really come down a lot just because of them cutting too much ahead of the Fed. So for me, this is one and wait. So basically the same thing as the Bank of Canada, but the fact of announcing that July perhaps. So the hawkish price would be that Lagarde completely shuts the door on July. Then I think the euro could actually go up versus various. So that's why I'm quite cautious of my trading in the euro right now. If she is just cautious, a bit style stiffers, then I think we are. Then you go back and you sell vol and whatever. The euro isn't really going to move, because that is the base scenario. If she said in turn that July is still a possibility, that means going away from her signing more with the hawks of late, then I think euro could actually get a little bit of a knock on the head. So that are the sensibilities that I'll be looking at. But look at the option volatility and look at the option expiries. Are we going to get more than a 30-50 point move? I really don't know, and from where I'm sitting, I really doubt it.
Yeah, very much so. So, and you know, Gavin says, yeah, we watched the how we finished the week. You know, that's something I always look at. But we don't even have to wait for the week. You know, we whatever happens today, we run into big data tomorrow in the US. So you know, we could bust 109 today in euro dollar, and everyone thinks, yeah, here we go, 110, and then we get an absolute bonanza of an NFP report, and we're back at sub 109 again. So again, you can't get into a trade and think you can sit on it for long. If you get in a trade, if you get some pips out of it, bank some, take some off the table, maybe leave a little bit on just for interest, but be mindful of the next risk event around the corner, because they're coming thick and fast at the moment, and you know, they can flip flop these markets before you can blink an eye. So that's the ECB done and dusted. We can move on from that. Thankfully, don't want to talk about those clowns for too much. So yeah, as I said, euro dollar, we know the levels. I've got levels up 109, 35, 40. If we do break above 109, 0010, down below, we know where the support is, starts around 30 and then into the 108 big figure. So if you don't want to do anything else in the middle, set yourselves at the range edges and see what happens. Dollar yen, that's doing its usual all over the shop business. You're trying to get short a bit, I think, Ali. Not for me at the moment. I'm still neutral on this one in terms of I don't want to trade it. There's too much going on. It's not a clear currency. If we don't have a 80 pip round trip overnight between Asia and Europe, then something's happening. But for now, I've got no real directional basis on this one still at all. Oh, you traded it yesterday. Okay, nice one, mate. Got to be nimble in this one. I think if you're short and you get that move, a little spike down, as you can see, it comes right back again really quickly. As I was pointing out yesterday, from all these moves, comes back quickly. So make sure you get your money off the table. Aussie Kiwi is another one I'm dabbling in. I'm still short on this one. Managed to get a bit away in this move down towards these lows here. Still looking pretty weak. Just deciding what it wants to do around this 61.8 fib. Tried holding below, then it's now trying to hold above. So this one's a bit on the fence at the moment. I'd like a move down to that 107.20s to take a bit more off. But for now, the trend is looking okay still, but it needs to make further progress on that one. I'll look at stocks quickly, then bang it over to Kay for a couple. Because we've had a decent move up, and Kay, I still don't. I never understand it. We've made a new high, marginally softer data. Is this more a bit of a risk move rather than what's going on in the data?
Yeah, I think so. Risk move. Interest rates a bit lower across the board. Still a bit of liquidity, enough liquidity in the market, not too much of a US Treasury offerings this week, so you can use your money to go elsewhere, and money at work. And if it doesn't go down, it goes up. So people, I'm not sure whether it's FOMO or not. Everybody's talking about FOMO. I think it's just still money at work, mate. And for as long as it works, it works. And I think there's a lot of models involved as well, because they just keep on buying the higher it goes. If it goes today, it will probably go up to 53.80 before. Oh no, sorry, that's the Nasdaq. The S&P, which is trading around 53.50s right now, is probably going to hit 53.80, which is the next extension level. And then we'll see how it works into the NFPs. And as Angela says as well, yeah, the NVIDIA effect is in there too. It's dragging everything in its wake. So VIX again at low levels. I mean, it's yeah, and it's across the globe as well. Huh? You look at the DAX. That thing is flying as well. So that is doing exactly following exactly the same thing. Although there we haven't hit any new historical highs. It's highs. It's still going as well. So money has to go to work, and money doesn't care whether you or me or anyone else thinks it's overdone. Those guys, they just have to continue to go, and voila, that's it.
Yeah, very much so, mate. Well, you can do a bit of voila now, mate, and I'm going to bang it over to you.
Yeah, okay. I'm just going to show this one because it's I've been showing this for a while. This gold, yeah. Everybody was thinking like, oh yeah, this is it. We are now on our way into the 22s. Well, I'm afraid to have to tell you that 23.15, 25 held, and now we are already back up to 23.60. So there's a bit of short-term one here. That comes in around 2053, 51, sorry. anywhere 51, 52. I thought it was 55, but it's 51. If that already holds 23.50 right now, then it's probably going to move a little bit higher. Now, I just wanted to show this because this zone is now really starting to show its importance. Yeah, it's been a traffic zone, and it's starting to show its importance even before we hit the 2300 zone, right? So I'd say, yeah, don't disrespect this. This is something that we need to keep an eye on right now. Is this going to fly? I don't know what flows are in the market. Personally, I think we are going to sit here until tomorrow's jobs report. It's a bit of a transition day. People will be eyeing at the ECB. If the ECB signals more cuts to come, for some reason, this may jump back on the lower yield train and even go higher, even driven by the ECB. 2385, 2400 are your next levels there. And this is about it. Yeah, people are looking at this as a potential head and shoulder in the making. So you go back up into the 24s, then fail, and go back down. I'm not going to make any prognosis right now, and because I just don't know. I'm just seeing that these low 23s are rock solid. Silver back above 30, but much less. I really don't know there. I know that I got given a little bit because I said below 30, I'm going to start adding just that tiny bit. I got given, but I'm just going to be very patient, see if this long-term 50% can be taken again, and we start to move higher again. But in the meantime, I'm just being very, very patient. I'd love actually if we would come back into these 27.5, 28.5 to load up more. But patience, patience, patience. Pop. I wanted to show something. Yeah, Kiwi. Okay, I've got like a tiny bit, really tiny, well, small bit running because we are wrestling with this 62 line in the Kiwi dollar. So get a weaker US report tomorrow. I think is going to be toast, and we are going to continue. In the meantime, for me, it is still the 61.45.55 zone that is going to be important. So if we start to get back below, that is going to be a signal of a rejection, and I don't think it's going to be good to be long again if this goes back. Call it 40.45 below there on the Kiwi. So that is one that I wanted to show today. Euro, you have already shown it. Euro crosses not really doing that much. Euro Kiwi is that one that I was in, but I've just killed it because we had a little bit of a move below this triangle. But then Gav rightfully mentioned all those lows that we've seen here in the low 175s on prior attempts. So perhaps we need to give a little bit more leeway to this triangle than just one blip below and then a bounce. So I'm flat for now. I'm going to wait for the ECB to give me a direction. But if risk continues to do well with an ECB cut, and then depending on what Lagarde says, it could be that we are finally on our way to 173s. I'm keeping a close eye on this one. And with that, over to you, Ryan.
Thank you very much, mate. Yep, I think that's it for today. We'll call it a day. Try to stay awake over Lagarde. Don't forget to check her tan level. That will tell us probably more than words out of her mouth anyway. And then we all look forward to the floodgates opening on ECB speakers tomorrow. James in our room said there's 5 already lined up. I'll be at least 7 bid on that because they do like to come out like rats from a grain yard. So have a great day, everybody. Trade safe. Thanks for coming. Thanks, Kate. We'll see you all tomorrow.